Good afternoon. Welcome, Mr. Thompson. You have a declaration as an expert. Would you mind to read it for us?
Mr. Right, okay.
Yes, if you have in a statement as an expert, right there.
Oh, yes, excuse me, I'm sorry.
No, that's right. I would appreciate if you could read that.
I'd be happy to do so. I'm amazed at this technology, and I'm only getting used to how to respond to things. I solemnly declare upon my honor and conscience that my statement will be in accordance with my sincere beliefs.
Thank you.
Mr. President, you'll recall that this morning we had a discussion about another demonstrative exhibit. I think it's in the binder that you were given, and we believe that it has no foundation in the record and should not be used this afternoon.
And I said earlier, if I plan to use it, I'd give him a chance to object to it. I don't know whether I will or not. I probably won't, but I don't think we're going to have to get to that. So there's no use arguing about it now.
Could we perhaps ask that it be removed from the tribunal's binders then until such time as you decide to use it?
The tribunal promises not to look at it until you tell us we can. Okay?
And if you look at it by accident, we promise not to understand it.
That may be true in any case.
It's got such prurient value that it's very tempting to open it, but we will resist the temptation. It's a forbidden fruit. So,
Much appreciated.
so Mr. Foster.
Thank you, Mr. President. Mr. Thompson, you have in front of you, I believe, I hope you do, your two expert reports that you've submitted in this arbitration dated May 18, 2009 and March 15, 2011, respectively.
I have what appears to be the figures from those reports. The text is not here.
Well, in that case, we better have the text. In any event, to move things along, assuming that Adrian puts the accurate version of the text in front of you, do you ratify each of your reports and affirm their truthfulness before the tribunal?
Yes, I do.
Okay. What expert analysis would you ask to perform in this case, Mr. Thompson?
I was asked to review the history of the FBG in Guatemala. I was asked to assess the circumstances that caused them to go out of business, and I was asked to assess the damages that they incurred as a result of this event.
Could you please describe to the tribunal your background that's relevant to that task?
Yes, sir, I can. I have a degree in engineering from MIT. I have a degree in business administration from the Harvard. I spent several years as an engineering consultant. I then worked for the U.S. Department of Transportation in the Office of the Secretary dealing with budget analysis and management, and in that capacity I performed a large number of financial and economic analyses of the budgets of the Department of Transportation, including the Federal Railroad Administration. I then was transferred to the Office of the Secretary for Policy Development, where I worked, again, primarily on development of national policy toward railways and railway investment. From there, I was a consultant in which we dealt specifically with economic and financial analysis in transportation regulatory proceedings, particularly. From there, I returned to the Department of Transportation and the Federal Railroad Administration, where I first ran the Northeast Corridor project, which was the largest single railway construction project of the 20th century, improving the railway line from Boston to Washington. This was a $2.5 billion project that involved a large number of economic and financial analyses of what to do and how to build the railway, plus, of course, the managerial issues of running such a large project. From that point, I was then appointed, promoted actually, to handle all of the lending activities of the U.S. Federal Railroad Administration. It has a fairly large program of lending to smaller railways. That involves a great deal of financial and economic analysis of the railway and of the proposed project, and making sure that the standards that the government had set for such railway lending were met. I was also briefly the associate administrator for, I was also the deputy administrator, and I was also the associate administrator for policy. From that position, I left to join the World Bank as the railways advisor, and I served in that position for 17 years. The job of the railway advisor is basically to review all of the railway lending that the World Bank does, to make sure that it meets the bank standards, to make sure that the economic and financial and political and policy analysis is all performed correctly. In that capacity, I probably visited 50 different countries and railways and talked about railway issues in those countries, and probably worked on another 10 or 15 countries where I didn't go there, but I worked on the analysis and the decision about the lending. After the World Bank, I want to add that one of the things that I particularly worked on in the World Bank was the program of concessioning of railways. As you may know, in the late 1980s, there were no railways in Latin America operated by the private sector. By the end of the 90s, every railway, every significant railway was operated by the private sector under concession. And it was one of the more successful programs that the bank had. In fact, our team received an award from the president of the bank for excellence in the Wolfenson era. After that, I left the bank and formed, as many of us do when we retire, I formed a small consulting company, and I've continued to work with consulting clients on many of the same issues, in depth in Latin America, in depth in Asia and Europe.
Well, I hope when you leave here you go back to improving the corridor from Washington to Boston.
Right now, I'm a member of the peer review group for the California High-Speed Rail project, and that's more than enough, I can tell you.
We will try not to let our feelings about your expertise be affected by those who have to take the Acela roadbed from here to Penn Station.
Believe me, sir, I sweated blood over the Northeast Corridor project, so I know very well what the issues are.
Please describe to the tribunal what you did to analyze and quantify claimants' damages in this case.
After a thorough analysis of what happened and what the information was, I prepared a model which basically contains all of the elements of the analysis. The model has a section that deals with lost investment and what investments were put in and how they totaled and how they are brought up to the present. It had a section that modeled with the railway operations so that I could see what the revenues and what the costs were going to be as a function of the traffic and the relationships between revenues and traffic. And it has a section that deals with the real estate investments and when they were made and what the expected revenues were going to be. And then it has a section that summarizes the results of all of these.
And in the section that deals with the railway analysis, did you take into account all the various inputs of revenues and costs and so forth?
The model actually has 28 different parameters that go into the estimation. It has 27 different places where a growth parameter is used. There are 9 different rates of growth depending on the commodity and the expense. It has a number of other elements into it. For example, it explicitly includes the weighted average cost of capital and how that's incorporated into the overall results.
Now, is Thompson Exhibit 1 to your rebuttal report your damages model that you're presenting in this arbitration?
Yes, it is.
And now, during your time at the World Bank as a railway advisor, did you prepare and analyze similar types of long-term forecast models for railroads?
I did that at the U.S. Department of Transportation. I did it at the World Bank many, many times on the loan applications that we were considering, and certainly I've done it since in my consulting practice.
Now, did the World Bank and the Department of Transportation rely on your analysis in deciding whether to commit millions of dollars in loans?
An honest answer is I was certainly part of it, but certainly in the World Bank, nobody ever makes the final decision that I found. But yes, it was a major part of it. Yeah. The Railways advisor at the World Bank typically has the last word.
What did your model reveal in terms of what would have been the long-term driver of profitability for FVG in the absence of the Lesivo resolution?
Without a question, the real estate. In fact, this surprised me in the development of the model, but it's very clear that when you look at the relative performance, that real estate was the controlling element in its value.
Now, besides your and Mr. McSwain's well, strike that. Let me ask you, with regard to the real estate, what did you rely upon for your inputs?
Mr. McSwain's inputs. I discussed his work thoroughly with him a number of times, and I know he visited Guatemala, and I relied upon his work.
Now, besides your and Mr. McSwain's projected values for railway operations and real estate, respectively, were there any other key inputs into your calculations of RDC's damages?
Well, of course, it all comes together through the weighted average cost of capital that Dr. Pratt developed.
Please explain to the tribunal how it all comes together through the weighted average cost of capital.
Well, the model projects anything in nominal dollars, that is the dollars of that year. The way then they are equated to being dollars of the same year is through the weighted average cost of capital, which also serves economically as a discount rate or as an accumulation rate if you're bringing values forward.
Now, is your model separated into the amount of the investment or sunk cost versus lost profits?
Yes, it is. The first section of the model deals with the lost investment or in the investments that were made and lost. The second two deal with railway operations. The fourth one deals with real estate, and the fifth part deals with adding them together.
Okay, look at Table 1 to your rebuttal report, if you will. And that's at tab 1 in the notebook. What does that table show?
That table shows the timing and the amounts of monies that were invested into FVG.
And does it bring them up to date to 2006 dollars through the use of the weighted average cost of capital?
It does in the final line where it says value in EOY, end of year 2006 dollars.
Okay, and the total dollar amount invested in nominal terms is shown where?
Three lines above that, the 19025323, that's entitled total dollar investment.
Okay, and does this sheet also show shutdown expenses?
It does.
And then when you use the 12.9% interest rate to bring the investment amounts up to date in 2006, what's the result?
Well, the total is 42,943,533.
And that's on the last line.
That is
the fourth column over.
That's right.
Okay. Now look at Table 8 to your rebuttal report. And that's the next page. I'm sorry. That's the last page. Tell the tribunal what Table 8 represents.
Well, that shows the elements of the claim and then shows how they're added together. The first element is the same number you just saw, the accumulated value of the lost investment. The second one is the recovery of shutdown expenses. These are the expenses they incurred in order to terminate the business. The third line shows the lost profits claim, that's the projection of the operations of the railway and real estate. The fourth, then you have the total revised damages claim, And then the lease income received 2010 is a negative item because these are incomes that they received and should be deducted from the claim. And then the bottom line, which I've colored green, is total net damages.
Now, please explain to the panel how you how your model computes the lost profits.
The lost profits forecast the revenues and costs of the railway. It forecasts the revenues of the real estate. It brings them all together into one model. It then calculates the net present value of the earnings, and then it deducts from that an amortized amount of the accumulated value of the lost investment. And then it reports the net present value of that flow, which is 22,188,540.
Thank you, Mr. Foster. Mr. Debevoise.
Good afternoon, Mr. Thompson. My name is Whitney Debevoise. I represent the Republic of Guatemala in this proceeding, and I'll be asking you some questions about your reports. Mr. Thompson, when were you first retained for this assignment?
I am not sure. May of 2007, possibly.
And
But I don't guarantee that. That's my recollection.
okay. And shortly thereafter, on the 14th of June, claimant requested this arbitration, submitted its request for arbitration in this case, correct?
I don't know.
Are you aware that the relief and remedies sought in that request for arbitration were for an amount totaling no less than $65 million?
No, I'm not.
Okay. For the record, that's paragraph 70A of the request for arbitration. In your first report, Mr. Thompson, you conclude that the total estimate of damages to RDC as a result of the lesivo is $64 million. Let's take a look at your. Let's take a look at paragraph 8 of your first statement.
Yeah, but please, again, for both the council and the expert, wait for each party to have finished speaking, because we are interpreted simultaneously, and there are 4 reporters, and they have to be able to identify who is speaking.
I apologize. I think we're both very involved in this.
Thank you.
You're correct. It says 64,035,859.
Okay. And did you help to compute the $65 million figure that claimant put in their request for arbitration?
I had nothing to do with that.
Okay. And when you made your assessment of damages, both in your first report and in your second report, you were analyzing 2 different revenue streams, correct?
The revenue stream for real estate certainly changed. The revenue stream on the railway didn't change at all.
Mm-hmm. But for the real estate revenue stream, you were relying heavily on the analysis conducted by Mr. McSwain, is that correct?
That is correct.
And you were relying exclusively on that input from Mr. McSwain, weren't you?
Subject to discussion with him, but yes.
Okay.
I certainly didn't develop any of the real estate estimates myself.
Right. And did you form an independent view about the reasonableness of the estimates that he provided to you?
Only that he and I discussed them. He discussed his methods and his 40 years of experience at doing this sort of thing, and I thought that sounded reasonable, and I didn't question him beyond that point.
Okay, thank you. Now, I think counsel for the claimants asked you about the scope of your engagement, Mr. Thompson. Do you recall that question?
Yes, I do.
And do you recall your answer to that question?
Not verbatim.
Did you say something about the scope of your engagement being to ascertain the circumstances under which Ferrovias went out of business?
Yes, I did, or at least I think I said that.
If I direct you to paragraph 4 of your first report, that would be on page 3 of the first report. You see that?
Yes.
Could you please read us the content of paragraph 4?
I was asked by Claimants Railroad Development Corporation, RDC, and Ferrovias Guatemala, FVG, to assess the experience of railway concessioning in Guatemala from the perspective of FVG, RDC, and the government of Guatemala, and to estimate the fair market value of FVG's usufruct and RDC's investment in FVG immediately prior to the declaration of Lesivo, in order to determine the monetary damages RDC and FVG have suffered as a result of the declaration.
All right. And is there anything in there about the circumstances under which Ferrovias went out of business?
I was speaking extemporaneously in my first answer, and this is the way I wrote it, and this is the way I meant it.
Mm-hmm. And did you have a specific purpose in mind when you examined the experience of railway concessioning from the perspective of the government of Guatemala?
Yes, because I had done the same thing in Argentina, Brazil, Chile, Uruguay, and Mexico, among a number of other countries.
Mm-hmm. And you felt that was relevant to this proceeding?
I felt that the conduct of the government was crucial to the way in which concessions are awarded and succeed.
And I noticed in paragraph 2 of your statement, you said that you had experience working in railway privatization or concessioning that included Guatemala. Is that correct?
I did.
Could you please tell us about that experience with Guatemala?
I was in Guatemala in, I think, 1990. I want to be absolutely certain of the dates. 1995, probably. At a conference with government officials in which we discussed the potential concessioning of the railway and the terms under which that concessioning should be awarded. And my advice to them at that point was that they should concession the railway because of the experience elsewhere in Latin America, that the concessioning terms should be very relaxed because asking for such things as advance cash payments would be inappropriate given the fact that the railway had essentially been destroyed by the government through the last 20 years and had been out of service and was going to be out of service for a long time. I subsequently had meetings with Guatemalan officials in Washington in which we discussed the same kind of issues. And had a number of meetings in the bank on the same issue where we considered whether if Guatemala asked us for a loan, we would be willing to grant it. So yes, I was involved in this in Guatemala in some detail.
Mm-hmm. But did you ever undertake any formal, I guess what the bank would call technical assistance under from the bank, or was this just informal talking?
We did not for two reasons. Primarily, we did not because the government of Guatemala never pursued the opportunity. And second, because both the bank and the IFC, I was uniquely a member of the analysis committee at the IFC as well as the IBRD. And we concluded that the lack of interest of the government in improving the railway, and specifically the government's unwillingness or inability to deal with the squatter issue, would simply make it impossible to have any kind of lending relationship.
And that's because the bank has very strong policies on relocation of peoples who are affected by bank projects. Is that
It has
correct?
very strong policies, and it is also willing to assist in the financing of proper relocation, and I've been involved in a number of those as well.
Right. But it's an expensive proposition, isn't it?
I don't know what you mean by expensive. It depends by the country and the circumstances. It can be expensive in some countries, and by our standards, not terribly expensive in others. But the insistence is that it be done fairly and properly.
And I think you described earlier this wave of concessioning that took place. I think this was a time when economic theory was perhaps captured by the expression the Washington Consensus. Is that the case?
I'm not an economist, and I've never followed those kind of fashions. I was pushing railway concessioning because I thought the private sector can run a freight railway better than the public sector can.
Mm-hmm. All right. And would it be fair to say that not all of the concessioning projects that have been undertaken by countries have been successful?
Yes.
And would it also be fair to say that one factor which frequently repeats itself in connection with failed projects is over-optimistic projections on things like traffic by the investor?
I certainly think there have been over-optimistic projections, but frankly, if I had to pick the number one cause of failure, it would be the government's conduct after the concessioning. We had many countries in which governments supported the concessions in every way, and those concessions, by and large, did quite well. We had other countries in which the government's heart was not in it. They didn't follow through on their obligations, and the concession had great difficulty.
And subsequent to leaving the bank, have you done any consulting work for RDC?
None.
Have you maintained any kind of relationship with RDC?
I see Mr. Posner from time to time at railway conferences or other meetings, but no.
Mm-hmm. Would you say that you're sort of a fan of RDC's? You've tried to promote their success?
Not that I know of, no. I mean, I admire what he's accomplished. He's done a pretty good job running his railway, but I'm not a fan of theirs any more than I'm a fan of the Union Pacific or the Southern Pacific or any other railway.
Could we show Exhibit C-74, please? I'm showing you an email from Henry Posner to Bill Duggan, Jorge Sen, and with apologies to Mr. Pietrandrea. I have a difficult last name as well to pronounce, so I apologize to him. With a copy to Brad Knapp concerning World Bank contacts for financing for FVG. Could you read us the paragraph numbered 3 in that email, please?
Sure. It says Lou Thompson made an extemporaneous speech to the effect that he could personally attest that, quote, Henry's been here numerous times and tried. Okay. Lou Thompson made an extemporaneous speech to the effect that he could personally attest that, quote, Henry's been here numerous times and tried, and squatters have in fact been a big problem, but where there's a will, there's a way, and we should try to help him. That's exactly what I remember Henry Posner saying.
I believe, if I read this email correctly, that he is quoting you as saying this. Is that not the case?
Henry Glue Thompson made an extemporaneous speech to the effect that he, Henry, or no, I can attest. Okay, I can attest. I did misunderstood that. I can attest that he's been there a number of times and tried, and squatters have in fact been a problem. But where there's a will, there's a way, and we should try to help him. That's exactly what I said earlier, that the bank had seriously considered working with Guatemala, either bank or IFC, and we were frustrated by the government's unwillingness either to seek a loan or to deal with the squatter problem.
And you used the word "we" there.
We, the bank or IFC, I definitely, having promoted railway concessioning in many countries, I thought Guatemala was a good opportunity to pursue that.
Okay. And the date on this email is? Could you please read that for us?
It says March the 11th, 2005.
Right. This was after you left the bank.
That was after I left the bank.
Yes. Okay. Did you ever hear Mr. Posner express the view that the bank should give more concern to traffic safety in Guatemala and less consideration for squatters?
Goodness, no. I certainly, in the annual reports that I read, one of the major chapters in his annual report was how much progress he was making on safety. I don't think any railway operator would ever sacrifice safety for anything.
I didn't mean to suggest that for a minute, Mr. Thompson, and I've read those reports, and I commend Mr. Posner for his concern with safety at the railroad. My question was whether he felt that road safety on the highways of Guatemala should be given a higher value than protection of squatters' resettlement rights.
I'm not aware of that.
Did you attend a railway symposium here at the World Bank in 2007 where Mr. Posner was present? He gave a presentation?
Quite possibly. I don't remember that, but it's quite possible.
All right. But he might have taken that point of view at that symposium?
I don't know.
And he might have submitted a loan application to the Inter-American Development Bank suggesting that the squatter rules should be waived because road safety should take a higher value?
I have no knowledge of that.
All right, thank you. Now, if we return to paragraph 4 of the report, your first report, where you talked about the scope of your engagement, you were asked to estimate the fair market value of the Ferrovias Usufruct and RDC's investment. Is that correct?
Yes.
And you used a discounted cash flow methodology to do that. Is that correct?
Calculating the fair market value, yes.
Yes. And can you, could we put up CLEX 01, please? This is the Brad, which is attached to Spiller 2.
Yes, that's what he said.
Yeah.
Where is it? This is, okay.
It's Could you scroll to page 451, please? Mr. Thompson, do you see the paragraph which begins fair market value then?
Yes?
Could you please read us that paragraph?
Sure. Fair market value, then, is the price a hypothetical buyer would pay and at which a hypothetical seller would sell based on, 1, the expected economic returns to the interest, 2, the expected risks of realizing those expected returns, and 3, consideration of alternative investment and rates of return available in the marketplace.
Thank you. So is it your conclusion that a hypothetical buyer would have paid $63.8 million for Ferrovias at the time of the Lesivo declaration?
That isn't what we said. We said a hypothetical buyer would pay $22 million amortizing the sunken investments. The $63 million is not the hypothetical value of the operation.
So the expected value of the lost profits was actually $30.1 million before you applied the amortization
Before the
mechanism.
amortization, yes, that's right.
Okay.
Mr. Thompson, can you make a pause and just make sure that he has finished the question so that it's in the record? Your answer is in the record?
Surely.
Thank you.
Sorry, again, I'm engaged.
Right. And yet, even though that was the fair market value, you added lost investments on top of that, right?
That is correct.
And then you made an amortization, which you said in your second report, I think, would account for double counting, would take care of that. Is that right?
That's correct.
But this question of adding something on and then amortizing it away is not mentioned in Dr. Pratt's statement that you read a few minutes ago, is it?
No.
Okay.
I would assume that the question had not come up in this context when he was writing this paragraph, and I would assume that you had a chance to cross-examine him on this morning, that you asked that question of the person who could answer it.
Mm-hmm. So would it yield the same result had you not considered lost investments at all?
I'm not sure I understand your question.
Well, the question is about your amortization.
Yes. What's
If
the question?
If you took the value of the money invested and you updated and then you amortized it, should that not come out to the same value as the DCF method that you used?
No, not necessarily. The approach that was used was to calculate the lost investment and bring that up to its current value, calculate the discounted cash flow of the earnings, and then amortize the lost investment against the earnings. That I understand that is a way that has been used to eliminate what some call double counting, and that's exactly the way we did it.
All right. So would you normally recommend to your clients that they would pay both the DCF and the investment carried out by the previous owner?
It would depend on the circumstances. By the way, the question here is not what I would pay for a railway. It is what the FVG lost in Guatemala and what they might have earned in the future, not what I would pay for it.
But I thought your instruction was to value Ferrovias' fair market value.
I think there is an additional statement that says, and the value of their investment. Am I correct?
Okay. Now, we talked earlier about the real estate valuations.
Yes.
Did you notice that his valuations changed rather significantly between his first report and his second report?
Yes, I certainly did.
And you considered that his inputs on this were reasonable the first time he did them?
I thought they were reasonable the first time he did them, but he felt that in order to be very conservative so that no one would challenge him, he decided to shift some of the things out in time and to reduce some of the others. He did that, and I didn't know that I necessarily agreed with him, but I felt that he was trying to be more reasonable, and that's why he did it, as far as I know.
But the question before the tribunal today isn't whether something is more conservative than something else, is it?
The question before the tribunal, as I understand it, is ultimately what is a reasonable compensation for what was done? And I believe that that's exactly what Mr. McSwain was trying to do.
And there was still a fairly significant swing in value, so did you ask yourself what could possibly account for that? Did you disagree with him?
No, I did not. He and I discussed this, and he convinced me that in order to be as conservative as he could, that he should make these adjustments.
Okay.
I was acting against the interest of FVG. We discussed it, and it seemed reasonable.
Are you aware that he forecasted in the first report a 12-fold increase in real estate earnings in the very first year?
I never calculated the multiple, but it doesn't surprise me, no.
And did you ask him if this was possible?
Yes, and his answer was that, as I recall, the answer was that with the support of the government, they would start receiving a lot of the right-of-way monies that were being generated informally, and that they would be able to receive them formally. When you're starting from a very small base, you can multiply anything by 12 and not end up with a great deal more.
And did he show you any evidence that made you think that was reasonable?
I didn't really question him on that. I think, again, you had a chance to cross-examine him on that.
And then in his second report, he introduced a ramp-up period for the revenues, which were introduced into your model. Is that correct?
That's correct.
Okay. And did he do that because Dr. Spiller criticized him?
No, I don't think so. I think that he, again, it was the same motivation as before in order to present something that was reasonable and defensible.
But the evolution in terms of the ramp up the flows is significantly different between the two reports. How could you think that both were reasonable?
I thought the first one was reasonable. I would still defend it. It was his judgment, and in order to present numbers that would not be challengeable at all, that he should adopt a little bit more conservative approach. That was his judgment, not mine.
Okay. And the revenues from the railroad side of this business are very small in your results, correct?
The net income from the railway side is relatively small. The contribution to net present value is relatively small, yes.
Yes. So of a total valuation of $65 million, is that really your conclusion on damages, or is that Mr. McSwain's conclusion on damages?
I'm not sure I understand that question. That's not formulated properly. What are you asking?
All right. Let's take a look at exhibit number 1, which counsel directed you to before. If we Look down under the 2006 column.
Are you talking table 1 now?
I thought this was Exhibit 1 to your second report, but I could be wrong.
There were a number of tables in that exhibit. It's the table reference that I need.
It's the lost investment claim calculation. I think it's the one that's in the
Yes,
book that was
indeed.
given us today that we've already talked about.
That's table 1 of exhibit 1.
Table 1 of Exhibit 1,
Yes.
excuse me. Thank you for helping us out. If we look down the column for 2006, we see a certain amount of net investment for the year. Is that correct? Could you tell us what that net investment was for the year?
1353630.
And you see below that the number of years before end of year 2006,
Yes,
and you put in 1 there. Is that correct?
yes,
And then you have the WACC multiplier,
that's correct.
1.129.
In this case, it's yes.
Okay. So is the implication of what you've done there that the entire $1,353,630 came into the company on January 1, 2006?
That is the way that has worked, yes. So that to that extent, it may well overstate the net present value slightly. I could have used half-year escalators. I've actually recalculated that based on half-year multipliers, and it really doesn't make very much difference.
But that is a bias toward RDC in this case, no?
Well, yes, but if you'll look at the other column, the 1,350, you will note that I did not discount that, and I should have. And had I discounted that the same way, that would have removed almost as much in value as I would have added by using half years. Mathematically, there are so many different calculations that need to be performed that worrying about half years was not going to change anything.
But the more common valuation technique is to use half years, is it not?
Not that I know of.
Let's talk for a minute about the weighted average cost of capital in your reports.
All right.
In your first report, you applied a 10% discount rate to your calculations. Is that
That's
correct? And I think if we turn to paragraph 54 of your report, we'll see the bases on which you justified using the 10% discount. If we look in the last sentence of paragraph 54,
Yes.
is that correct? You said that 10% is a common standard for use in analyzing and valuing long-term infrastructure investments,
That's correct.
right? And did you have any source for that number?
Yes, I did. Common practice at the World Bank was to use 10%. I believe the government of Guatemala used 10% in its analyses. I've subsequently done some research on this and was surprised to find out that in the U.S. government, OMB Circular A94 actually requires the U.S. government to use a 7% rate, although they permit sensitivity analysis between 4 and 10. But I did not regard 10% as an improper rate, and I still don't.
And in fact, the second justification you cited here, because there is no citation for the first one, the second justification was that this was the discount rate that was used by Ferrovias in its usufruct bid proposal. Is that correct?
That was certainly my understanding, yes,
Okay.
and acceptable to the government.
And in fact, it was required by the government, was it not?
Well, yes, but
But that's not what you said in your report. You said that that was Ferrovias's.
let me make that more precise. That Ferrovias was required by the government to use still doesn't make 10% sound unreasonable.
I see. Do you think that's the rate that Ferrovias would have used left to Ferrovias would have used left to its own devices?
I do not know.
Okay. Now, the third reason that you state there was that it's common use in real estate valuation analysis. Is that right?
That was the rate that Mr. McSwain used always in order to convert a fixed payment into a series of annual payments.
Okay. Why don't we take a look at Mr. McSwain's report, his first report, paragraph 4.2. Can you put that up on the screen, please? On page 3 of the report, please. If we could focus on page 3, paragraph C. Do you see that there, paragraph C?
Yes.
Okay. I have assumed that simple ground leases would have to have a minimum annual rate of return of at least 10%. So he wasn't saying that 10% was the rate, was he?
It's the rate he was using.
But it could have been a lot more, couldn't it?
I'm sure any investor would like more. I'm sure they'd like the highest return they could get.
And in fact, when Dr. Pratt did his analysis, he came out with a higher rate, didn't he?
He came out with 12.9%.
And I think in your second report in paragraph 20, if we could bring that up, please. This is on page 7, paragraph 20. Here you're responding on the question of the discount rate, and you're saying that Dr. Pratt has calculated that a more appropriate weighted average cost of capital should be slightly higher, 12.9%, and you defer to that?
Yes.
You see that? Okay. And you're telling us that a difference of almost 30% is only slightly higher when we're talking about discount rates?
Yes.
300 basis points?
It's a lot less than 18.7%, which is what Spiller wants to do.
But in any case, even though you justified your 10% assumption in your first report, it turned out not to be the right one, right?
No, I think that's incorrect. I would be perfectly happy to continue to defend 10%, but in order, again, to make the best use of Dr. Pratt's expertise, I have agreed to use his number.
I think if we look at, I apologize, I've forgotten already, tab 1 to exhibit 1, is that the?
Table 1.
Table 1, I'll write it down so we can remember this time. Table 1. You have, if we look at the shutdown expenses column, a value of $1,350,429. Is that correct?
Correct.
Could we please put up CLEX 06 from Second Spiller? I direct your attention to the numbers at the bottom of this page, which I think are the components, the major components of this item. Suppliers and operations expenses, $710,000.
Yes.
And the railroad was still running in 2007 until October, correct?
The railway was, I think the last train ran in September of 2007.
September of
Yes.
2007. And payroll,
I see that. What I don't see there is any indication of exactly when it was expended.
but you certainly looked into that in your model because you had all the numbers month by month, no?
The model is not month by month, but the model is based on the data that was furnished me by Mr. Hensler, and I cite that in my
Yes.
report. I did not attempt to argue with his accounting determination of what was what.
Okay. And the last item here is the Fegua Cannon and Trust Fund payments, $125,000, correct?
Yes. So
And that's directly related to the functioning of the railroad, and correct?
I honestly don't know how to characterize that.
All right. So among this total of more than $1 million, you claim that this is all shutdown expenses?
That is what I have added into the model. This is what was provided to me by the accountants, and I did not argue with them on this.
You did not argue with them? Okay,
No,
you
I
just
did
took
not.
it at face value?
That's
All right,
correct.
Very good. So it would certainly be open to the tribunal to rethink this one.
I
Thank
think
you.
everything's open to the tribunal to rethink if they wish to.
How much time do I have? Now, in your analysis, you formed some views about the economic wisdom of pursuing the rehabilitation of the South Coast line, did you not?
Yes, I formed a conclusion about both the financial and the economic wisdom.
And was your conclusion from the perspective of Ferrovias as an investor that they should not pursue that investment?
My conclusion was that the total net present value of the cash flow of the operation of the railway would be slightly less if they pursued the Pacific side than if they did not.
And in your second report, you noted in footnote 3, did you not, on page 4, that the values you had calculated were end of year 2007 as opposed to end of year 2006. Is that right?
That refers to the first report. In fact, the values in the second report are EOY 2006.
That's correct.
That's
but
correct, yeah.
I'm just kind of left wondering why you did the first one with 2007 if your assignment, as you stated it in the beginning of your first report, was to find the value at the time of the Lesivo.
Well, I honestly cannot answer that question for you. I believe that we, at that point, were under the apprehension that there would be some kind of decision around 2007, and so we should look at end of year 2007 as the appropriate index year. That clearly we now know that wasn't true, and all of my numbers have now been, and this is something that deserves emphasis, by the way, that all of the numbers are, as best I can determine them, end of year 2006. and any post-award interest, if there is any, would be computed on that basis, not 2007.
And I think in response to this last question, you just said we. Who is the we? Yourself and who else?
Mr. McSwain, I'm sure.
Mr. McSwain. You thought that Mr. McSwain thought that the railroad was going to close down in 2007? You were discussing that with him?
We discussed the whole issue. I don't know. It's an interesting question who we is.
I think that we in the tribunal are probably equally interested in the answer to that question. Can you answer the question?
I know that we held extensive discussions of this report. This is with counsel and with Mr. McSwain and the other people who were looking at this, RDC as well, FVG as well. And I know that that we had originally concluded that I should express my numbers in my assignment as end of year 2007, and then subsequently decided to reset all of the numbers to 2006, and that's what's been done.
Okay. And then if I can direct you to paragraph 21 of your second report. Do you see there where it says that it's not surprising that experts will reach somewhat different conclusions and projections over 42 years in a small developing country like Guatemala?
Yes.
Isn't that the real vulnerability in the analysis here?
I'm not sure I know what you mean.
Well, if you continue on to read that paragraph, you said something about, I believe that for every factor or parameter in my projections, there is arguably overly optimistic. There are many others that are overly pessimistic, and therefore you think the net result is reasonably possible. It's a kind of a rough justice argument, isn't it?
Well, no. Actually, Dr. Spiller, in his second report, says, if I might paraphrase it, I think it's in paragraph or footnote 44 or 47 of his report, he says basically that it is well settled, here he's quoting himself with approval, I think, that it is well settled that forecasts of profits are either certain or speculative. And I think that's a very false dichotomy. In fact, there is no certain projection of profits. There can be speculative ones, but in fact, there's a lot between certain and speculative. There is reasonable and professional, and I believe that the forecasts that I developed are reasonable and professional. I would not expect any two economists to agree on any 42-year forecast. Certainly that was my experience at the World Bank, and I'm sure that that would be the case here.
And in preparing your report, did you take a view on the question of competition between the railroad and trucks?
Inherently, yes.
No, in the specific case of Guatemala.
I did not do a modal split model using the coefficients that one might use for a modal split model now.
And why was that?
Because the data do not exist to do such a thing. We can only base a forecast on what has been happening and then what might happen in the future. I did not attempt to model trucking competition per se. It is modeled indirectly in that in the forecast that I have, I showed that the railway traffic at the port never rose to more than about 7 or 8% of the traffic from the port. The rest of the traffic would be truck, but I didn't have an explicit model of rail versus truck.
Mm-hmm. And did you take note of the statements in the annual reports, particularly the letters written by Mr. Posner about the stiff competition from trucks?
I certainly did.
And that didn't affect your analysis in any way?
No. I mean, it does in the sense that you have to look realistically at what the railway can achieve, and that's exactly what I think I did.
Okay. Now, in paragraph 34 of your second report, you used as a comparison the fuel efficiency of U.S. Class 1 railroad industry. Is that correct?
Yes, I did.
But Ferrovias was a low Class 2 railroad, wasn't it?
Yes, that's correct.
And you still think that was a proper comparison?
Oh, absolutely. In fact, the U.S. railway, the ratio of U.S. railway fuel to expenses is about 11%, Class 1 railways. My model allowed the FVG percent to rise to almost 50%, which I knew was unrealistic, but I left it there because I wanted to make sure that the expense base for other things would be adequate. If in fact you allowed that FVG ratio to be maintained at 35% rather than 11%, it would increase the value of the company by about $4.3 million. And if you allowed it to be held to 30%, which is still almost 3 times the U.S. percentage, the value of the company, net present value, would increase by about $7 million.
And in paragraph 36 of your second report, you referred to a little discussion that you and Dr. Spiller had about the capacity of Ferrovias to...
I didn't have a discussion with Dr. Spiller, but...
Well, that was a metaphor for the exchange of expert reports. And I think he suggested that you had not included any investment to increase capacity to handle the higher traffic that you were projecting, and you responded that it was not explicitly addressed in the model, but that you'd sort of taken care of it anyway.
Yes, that's correct.
Yeah. Is that the hallmark of good valuation analysis?
This model has 28 explicit variables. It has 27 different places where growth rates are used. It has about 9 different growth rates. It has a number of other variables. It's an extremely complex model. Trying to build into it an explicit investment part of the model I thought would be too complex, and I thought it would just build another area to argue. However, as I pointed out in my report, first of all, I allowed the expenses for maintenance of rolling stock and right-of-way to increase faster than other expenses. As I've just pointed out, that the fuel expenses are probably much higher than they need to be. Either of those would make up for any shortfall in the maintenance of the right-of-way. As Dr. Spiller pointed out, the U.S. Class 1 railways tend to spend around 20% of their cost on maintenance and capital expenditure. However, the density of traffic on U.S. railways is 117 times what it would have been in Guatemala, and so I would expect them to spend a little bit more. But even if you brought the Guatemala ratio up to the same 20%, which I think is not going to be necessary, that would have required an addition of $4.3 million or so to the net present value of the railway, and that would easily be overwhelmed by savings on fuel, as I pointed out, or there were the trust fund that should have been funded between 1999 and 2007. There was the trust fund contributions from Cobigua, and there were the future trust fund contributions having to do with real estate, the 10% of the real estate. The sum of those over the period of time would be $50 million, or a present value of a little over $8 million. Any one of those, as I said implicitly, would be more than enough to make up for any shortfall in right-of-way maintenance or capacity.
Now, you've had another one of these metaphorical discussions with Dr. Spiller about the question of amortization of the buildup in the NCC model. do you have any comment about that, or do you
Right,
going to leave
that's-
that to Dr. Pratt?
That's not a question. I don't know how to comment on that.
Would you care to comment on it?
No, I mean, give me a question, I'll answer. But
I think I have one final question for you. If I can find the proper reference. Would we please put up the annual report for 2005? That's Exhibit C27H. And if we could go, oh, sorry. We could go to RDC 001277, please. And I direct your attention to the right-hand column, to the last sentence of the second full paragraph that begins with the longer answer is. Could you please just read that?
the longer answer is we are supporting a business whose ultimate value we do not yet know.
Okay, thank you very much. I have no further questions.
Mr. Forster, for redirect.
I don't have any further direct. I think it probably would be more productive for the time to be spent on any questions the panel has than for me to be posing my questions. I just would like to point out one thing in connection with some of the questions from Mr. Deverbois. He was questioning the issue of the calculation of the shutdown cost and the numbers that went into the shutdown cost. Those numbers all came from Mr. Hensler and Mr. De Leon, whom the respondent chose not to cross-examine.
Thank you.
Now that we've had testimony from claimant's counsel on the issue, I'll just let the tribunal look at the exhibit for itself and make its own conclusions. Thank you.
Mr. Thompson, you in a sense have a sort of unusual and unique perspective here. You're obviously retained by the claimant, but you had a prior association with the government of Guatemala. Was that in your capacity with the World Bank when they were considering privatization?
Yes, sir, it was.
And in reading your statement, you gave them certain advice about how to structure the use of fruct in terms of flexibility and not seeking too much in upfront payments and so forth.
That's correct.
Can you summarize that and why you made that judgment?
By then, this was in the mid to late 90s, a pattern of railway concessioning was being established. And some of the earlier lessons that we had learned were that it was not proper to ask that a concessionaire pay a lot of money up front and then try to make it back over the years, because it tended to reduce the number of competitors that we got, and it also tended to increase the risk of the person making the investment. That's why it reduced the number of competitors. And especially in Guatemala, where, as I said, the government had essentially demolished the railway over the past 20 to 25 years, and where the railway had been out of business for over 3 years, I simply felt that no one would be willing to take that on if they had to invest a lot of money up front. And that would be far better to ask them for a percentage of gross revenues, which is easy to account for. Net revenues are always hard to account for because your accountants are in charge, but the gross percentage of gross revenues, and that would induce the largest number of competitors, which it did, I think.
And at least when you had your World Bank hat on, and given the role that you played at the bank, you saw railroad development as being an important driver of economic development in developing countries, I take it.
Well, in fact, sir, I think the tragedy here was not railroad development alone, but also Guatemala, because I felt, and the government of Guatemala, when they announced the concessioning, said
I'd like to object to this. We're not here to pass judgment on the country in this type of context.
I don't believe I passed any judgment on Guatemala. I simply said it was a tragedy for Guatemala, and I mean that exactly as I said it. The government had an opportunity in economic terms to save a lot more money than actually FVG was ever going to make in profits. And it was because of increased highway safety, reduced highway wear, improved economics of transportation, and that opportunity was lost.
If you could turn to page 19, paragraph 76, 77, and 78 of your first statement, please.
Get someone. This one. What were the paragraph numbers, sir?
76 through 78, pages 18 and 19.
Yes, sir.
You indicate that first, it's manifestly impossible to operate a railway without rolling stock. Now, at least it's my understanding that even after Lesivo, that FVG continued to control the rolling stock in this situation. Is that something you're aware of?
Yes, I believe they continue to control it.
And do you have any perspective on why they might not have operated the rolling stock that they had?
I would, if I were a railway operator, I would be very reluctant to operate rolling stock that might be taken away from me in the short term, because I wouldn't want to maintain it. I wouldn't want to take the responsibility for maintaining rolling stock that suddenly might be taken away. As soon as that rolling stock was under threat, the ability to invest in the railway or to plan to operate it was equally under threat.
Now, we're 4 years later, and the rolling stock still has not been taken away. I don't know if does that change your view?
No.
You also make it clear in your economic analysis that the great bulk of the revenues would come not from the operation of the railroad and the rolling stock, but from the exploitation of the rights of way under a separate contract, 402.
Yes, sir.
And is it your understanding that 402 was not declared Lesivo?
I really can't render an opinion on that. I don't know.
Do you know of any reason why the railroad could not have continued or cannot continue today to exploit their right-of-way by charging revenues for those who are using it?
Well, I think they should.
And do you know whether they've been doing so?
Well, we showed real estate revenues that had been derived since 2007 through 2010. We deducted those from the claim. I deducted them from the claim.
They're quite modest, though, are they not?
What is it, $2.2 million over the 5-year period.
Mr. McSwain talked about industrial squatters on the right-of-way and also the leasing of, the the use of electric transmission lines and poles on the right-of-way. Is that something you're aware of?
I have discussed it with Mr. McSwain, but I'm really not a railway right-of-way expert or real estate expert. It has always been my argument that railways should do their best to exploit whatever real estate assets they have.
In paragraph 77, I just want to try to probe and maybe you can give the tribunal just your perspective, because you did consult with the government. In many ways, they followed your advice in terms of how to, first, making a decision to privatize the railroad, second, in structuring the use of FRUG. Is that correct?
I'm not sure it'd be fair to say they followed my advice, but certainly what they did was consistent with my advice.
And you felt that the use of FRUG itself was a reasonable construct for
I certainly did.
privatization?
Again, sorry.
You felt that the use of FRUG was a reasonable construct and consistent, at least, with the kind of advice you had given.
Yes, I did.
You talked throughout your statement about the damage done to the government in the declaration of Lesivo and what's transpired. I'm trying to get a perspective. It certainly would help me try to understand, because again, you dealt with the government. What would be, from your knowledge, what would be the advantage to them of declaring the railway rolling stock part Lesivo? What might they see as a gain to them? Countries don't normally act in ways that are against their interests. What interest would you see from your working with them, with your World Bank hat on, in making that decision?
I have racked my brain, sir, and I cannot come up with a good answer. I do know that had the World Bank been involved in a loan to the government of Guatemala, we would have expressed extreme disapproval if they had done something like this. But what their motivations were, I don't know.
You mentioned in 77, under normal circumstances, any alleged technical, and in this case insignificant defects in these contracts presumably could and should have been resolved by negotiation or simple agreement, especially when in this case it should have been in the obvious interest of both parties to correct any alleged defects. That's the statement you've made.
Yes, sir, and I believe that very strongly.
Have you, again, I'm asking you to put your World Bank hat on. You've had experience with other countries. Have you seen this kind of situation in other developing countries who have privatized their railroads? And can you give us any perspective from other experiences that you might have had?
I have never seen this kind of thing in any other country. I know that in Bolivia, when the government changed, there has been a change in attitude about the private sector, and that has not been good for the concessions. But I know of no other country in which the government effectively forced the railway out of business.
And in paragraph 78 and more broadly, are you telling the tribunal that notwithstanding the fact that the railroad continued to control the rolling stock, that from your perspective you think that trying to operate the rolling stock after Lesivo would somehow have not been a reasonable thing to do?
I think that Lesivo put the operation of the railway at very great threat, and I think it caused the railway then to wonder what would happen with money they put into maintaining the railway stock if it were taken away. I think it made the customers ask, why should we contract with the railway to ship our cargo when the railway may not have its rolling stock. I think it could have caused the real estate investors to have the same attitude. I think as soon as the government's attitude toward the railway was made clear by Lucivo, that it put the entire operation under threat. And I think it probably frustrated the operation of the railway.
There's a doctrine, whether it applies here or not is another story, but there's a sort of a doctrine that we have in American jurisprudence about mitigating damage. Now, here under contract 402, which was the right-of-way contract, and I know that's not your expertise, the exploitation of rights-of-way, but from your experience and your knowledge of this particular situation, and the fact that Mr. McSwain has told you that there are a lot of industrial users and utilities that are using this right away, would it have been prudent for RVG to more aggressively try to continue to exploit its right-of-way, particularly since, again, in your own studies, this is a substantial part, indeed the substantial part of their expected profits?
I believe it would have been prudent for them to exploit their right-of-way as effectively as they could, subject to trying to run the railway and subject to the investment resources that they had available. They had to make choices. But yes, I think they should have tried as hard as they could.
Are you saying in any way that the declaration of Lucivo on the rolling stock affected their ability to do so?
It would, in the sense that any potential partner would take the declaration of Lucivo and the government's attitude toward the company itself into account. If they were thinking about a 50-year investment project and you don't know what the government's attitude is, you're going to be careful. That doesn't mean they might not go ahead, but they would think a lot about it before they did.
Now, the figures for overall damages are, when you take both the lost sunk value and sunk investment and profits, comes to some $60 million.
Yes, sir.
This is on a base in which the company had not turned a profit in any 1 year up to the point they left. Is that your understanding?
That's correct.
So on what basis would you assume that they could have turned things around so dramatically, not having been able to generate a profit in the first 6 years or 7 years or 8 years of operation?
I'm not sure that reflects a turnaround. If you look at their performance in the first 5 years through 2005, before, as Dr. Spiller admits, the performance in 2006 was affected by Lucivo. But if you look at their performance 2000 through 2005, they grew faster during that period of time, the railway did, than any other concession in Latin America did in its first 5 years. Their container growth was 40.5% compounded annually, which is pretty spectacular. They actually had broken even in 2004, and the trend up through 2004 at least was pretty positive. There's no reason to assume that a great turnaround was required, just continued progress in the direction they were going.
What do you consider, since we'll be hearing from him shortly, Dr. Spiller's, and I've read the statements and wouldn't expect you to summarize each one, but what do you consider the most central critique he makes of your calculation, and what is your response to that fundamental critique? Is it the overestimation of capacity? Is it the percentages that were used by Dr. Pratt? What as you look at, you're an experienced person, what do you see as the heart of his critique, and what's your response to it?
Very hard for me to answer that question, sir. He
Well, if
critiqued.
it's hard for you, it may be harder for us.
He had three critiques, I think. One of them was the investment issue, which I think I've answered. One of them was the traffic growth issue, which again I think I've answered. And the third was the issue of the so-called double counting. And I think that's been discussed in detail. And so I don't know how to characterize them beyond that.
All right, but let me go back then to the double counting. I want you to explain perhaps explain yet again why you believe that this calculation of adding both the investment return, sunk investment accumulated over the years, and the profit is not, from your perspective, double counting.
Well, because what we actually did was to take the lost investment and write it off against the future profits. So that value has been written off, and therefore, strictly speaking, there's no double counting. Dr. Spiller's argument.
And you did that by the amortization?
And we did that by the amortization, which is exactly the way the finance profession or the accounting profession would do this. The economics profession would argue, as Dr. Spiller does, that you should write off the net present value rather than, or you should readjust the value each year. But that is not what is done in accounting and is not what is done in normal financial analysis of rates of return.
So we're facing here a really difference in philosophy between the way the accounting profession treats the issue and the way the economics profession.
Yes, sir.
And from your perspective, has he accurately portrayed the economic profession's view of how to look at this?
He has, but it's interesting that his version creates a nullity of the idea of amortization. Because if you follow his approach and revalue each year by the value of the money, arithmetically, the value that you write off is exactly equal to the value you start with, and so you may as well not do it in the first place. That's the mathematical result of the way he's arguing.
On page 34, table 11, you have two scenarios. Real estate plus Atlantic operations and real estate plus Atlantic and Pacific. Would you believe that the scenario 2, particularly with the specific, is even more conjectural because phase 1 had already been completed and phase 2, the southern coast, hadn't, or is that not your view?
Well, I think the problem was that probably operations on phase 1 had been more recent than operations in phase 2. And quite possibly the state of the infrastructure on the Pacific side was much more destroyed, in bad and worse shape. Also, the proposal on the Pacific side was convert the railway from 3-foot gauge to 4 feet 8.5, which involved a much greater investment and therefore a much more difficult project to undertake.
Okay. Thank you.
Mr. Foster?
No, sir.
Mr. de Beauvois on Secretary Eisenstadt's questions.
Thank you. Mr. Thompson, I think that Secretary Eisenstadt reviewed with you paragraph 77 of your first report, and he focused on the language about technical problems, and you said, I believe, in the fourth line there, in this parenthesis, and in this case, insignificant defects. Are you a Guatemalan government lawyer?
No.
But you've advised a lot of governments, haven't you?
Yes, I have. Normally not on legal matters, but yes.
Right, exactly. So you're not really in a position to determine whether a legal concern raised by Guatemalan lawyers is significant or insignificant, are you?
No.
Thank you. And if the president of a country were being told that he might have personal liability if he didn't do something, you would call that insignificant?
If I were the president, I would not.
Okay, thank you. You talked about the approach that was taken here, and you said that was basically followed an approach that you would have followed. Would you have accepted a bid response which, in response to a request to furnish prior year's financials, said, we are a private company, therefore we're not going to give you our financials?
I don't know. It will be determined by the terms of the bidding. If the bidding said you have to furnish and you didn't, I would have been concerned, but I don't know.
I apologize, but I don't see how that followed from anything Secretary Eisenstadt asking.
Question had not been asked.
I believe that he was asked by Secretary Eisenstadt about his experience as a World Bank advisor to countries, and he testified that he thought that what the Guatemalan government had done had been to follow advice that he would have given. And I'm asking a question about the very bidding that was conducted here. And the record will reflect that the answer that I described was precisely the answer that RDC and Ferrovias gave when they participated in the bid.
If I might say, I never said that I gave the government of Guatemala any legal advice whatsoever, nor did I say that I advised them the exact terms of the concessioning. I only advised them on the general terms of the concessioning. If they had asked me, should they have a term either requiring or not requiring a company to furnish years of prior financial reports, I wouldn't have had any advice at all.
So your position was that notwithstanding the fact that it takes a substantial amount of capital wherewithal to rehabilitate an 800-kilometer railroad, the financial capability of the bidder was not a relevant matter?
I didn't say that. I said that I wouldn't have advised them one way or the other on including such a provision in the concessioning documents.
And my final question, Mr. Thompson.
I'm about to run out of water.
Well, we can get you some more, but this is the final question. We're all going to take a break here in a minute, I hope. My question is that you were asked by Secretary Eisenstadt about the differences between the approach of the accounting profession and the economics profession. Is accounting your profession?
No, I have an MBA from Harvard and I have studied accounting issues and techniques, but no, I'm not an accountant.
Thank you. No further questions.
So, well, Mr. Thompson, thank you so much.
Thank you.
So you may leave.